NVIDIA has created more millionaires than almost any stock in modern history. But recently, the stock has stumbled. It's fallen from recent highs. Wall Street suddenly seems nervous. And everywhere you look, people are asking the same question. Is the AI boom finally over? Or is this exactly the kind of moment that separates average investors from extraordinary ones? Because while everyone is focused on the falling stock price, almost nobody is talking about what's actually happening inside NVIDIA's business. And by the end of this video, you'll understand why some of the smartest analysts on Wall Street are still incredibly bullish, why others believe NVIDIA's best days are already behind it, and the one number you should watch before buying or selling even a single share. For years, NVIDIA looked unstoppable. Every earnings report shattered expectations. Every AI breakthrough seemed to send the stock even higher. Then, the momentum slowed. Investors became nervous. Competitors started making headlines. And suddenly, people who couldn't stop talking about NVIDIA last year started asking if the party was over. So, is NVIDIA actually in trouble? Or are investors focusing on all the wrong things? Let's find out. Here's something strange. NVIDIA hasn't suddenly become a bad company. In fact, the business itself is still growing at a pace that most Fortune 500 companies could only dream about. Yet the stock keeps struggling. Why? Because the stock market doesn't reward companies for being great. It rewards companies for being better than expectations. That's an enormous difference. Imagine owning the fastest restaurant in your city. Business doubles every year. Customers line up around the block. Then one year, sales only grow by 40%. Most restaurant owners would celebrate. But if investors expected 60%, your stock could actually fall. That's exactly what's happening with NVIDIA. For years, the company didn't just beat expectations. It absolutely destroyed them. Revenue exploded. Profits exploded. Cash flow exploded. And investors became convinced this would continue forever. But markets don't work that way. The higher expectations climb, the harder they become to beat. Think about it. If a basketball player averages 10 points a game, scoring 20 is incredible. But if they average 50, scoring 45 suddenly feels disappointing. Even though 45 points would be unbelievable for almost anyone else. That's the expectation trap. And NVIDIA is living inside it. Now here's where things get interesting. Despite all the headlines saying NVIDIA is slowing down, the company's underlying business still looks remarkably strong. Demand for AI infrastructure remains enormous. The newest Blackwell chips continue attracting major enterprise customers, and several analysts say demand is still outpacing available supply. In other words, people aren't buying fewer AI chips. They're still trying to buy as many as they can get. So why has the stock become so volatile? Because investors are beginning to worry about something much bigger than this quarter's earnings. They're asking, what happens after AI? That's the real question. And honestly, it's a fair one. For the last 2 years, the biggest technology companies on Earth have spent hundreds of billions building AI data centers. Microsoft, Amazon, Google, Meta, all of them have poured astonishing amounts of money into NVIDIA's hardware. But investors are starting to wonder, can that spending continue forever? Or will these companies eventually slow down? That's one of the biggest fears weighing on NVIDIA today. But that's only half the story. There's another concern that's getting even more attention. Competition. For years, NVIDIA practically owned the AI chip market. Now, everyone wants a piece of it. AMD, Intel, custom chips built by Google, Amazon's Trainium chips, Microsoft's Maya platform. Even startups are trying to challenge NVIDIA's dominance. At first glance, that sounds terrifying. More competitors usually mean lower profits, lower margins, lower growth, lower stock prices, right? Not necessarily. And here's why. Imagine opening the first gas station in a town with only 10 cars. Competition wouldn't matter much. Now imagine that same town suddenly has 10 million cars. Even if 10 more gas stations open, everyone still makes money because demand has exploded. That's what's happening in AI today. The market itself is growing so quickly that multiple companies can succeed at the same time. Even so, investor concerns have increased because several large cloud companies are developing their own AI chips to reduce dependence on NVIDIA. In response, NVIDIA recently unveiled a new strategy that includes revenue-sharing partnerships with emerging AI cloud providers, creating additional recurring revenue streams beyond simply selling hardware. That's a subtle shift, but it's a very important one. Instead of only selling expensive chips, NVIDIA wants to earn money from the AI economy itself. That's a completely different business model, and it could become one of the company's biggest advantages over the next decade. But before you assume that's enough to keep NVIDIA on top, there's one risk that almost nobody is talking about. And surprisingly, It has nothing to do with AI chips themselves. We'll get into that next. Here's something that might surprise you. If I asked most investors what NVIDIA's biggest risk is, they'd probably say AMD, or maybe Intel, or even a new AI startup. But according to many analysts, those aren't the biggest risks at all. The real threat is geopolitics. Think about it. NVIDIA designs some of the world's most advanced AI chips. But it doesn't operate in a vacuum. Governments care deeply about AI because it's no longer just a business tool. It's becoming a matter of national security. That means politics can affect NVIDIA almost as much as technology. And we've already seen this happen. Over the past few years, the US government has repeatedly tightened restrictions on exporting advanced AI chips to China. NVIDIA itself has warned investors that future export controls could materially affect its revenue, operations, and ability to serve international customers. Why does that matter? Because China used to be one of NVIDIA's most important markets. Now imagine owning the world's best-selling sports car. But one of your biggest countries suddenly says, sorry, you can't sell that model here anymore. Even if demand stays incredibly strong, your sales take a hit. That's exactly what NVIDIA has been navigating. And while the company continues finding new customers elsewhere, losing access to such a massive market isn't something investors can simply ignore. Now here's where things become even more fascinating. Restrictions don't just reduce sales. They also create new competitors. As NVIDIA's most advanced chips became harder to obtain, Chinese companies accelerated development of their own AI hardware. One of the biggest beneficiaries has been Huawei, whose AI chips have gained significant traction in China's domestic market. Think about that for a second. Sometimes, when you can't buy from the market leader, you're forced to build your own alternative. History is full of examples like this. Countries that couldn't import certain technologies eventually learned how to make them themselves. That doesn't mean they'll immediately catch NVIDIA. Far from it. NVIDIA still has an enormous lead in software, networking, and developer tools. But it does mean the competitive landscape is changing. Slowly, quietly, and that's something long-term investors should pay attention to. But here's what most headlines miss. People often think NVIDIA only sells chips. That's no longer true. Today, NVIDIA is increasingly selling entire AI infrastructure. Imagine buying a computer. You could buy the processor from one company, memory from another, networking equipment from someone else, and then spend months making everything work together. Or, you could buy one complete system that's already optimized. That's the direction NVIDIA is moving. Instead of saying, here's a GPU, they're saying, here's your entire AI factory. That includes GPUs, networking, software, cooling systems, developer tools, and increasingly, complete rack-scale systems. Many analysts believe this full-stack strategy gives NVIDIA a much stronger competitive moat than simply having the fastest chip. That's important because it's much harder for customers to switch away once their entire AI infrastructure is built around your ecosystem. It's a little like smartphones. Changing phones isn't that difficult. Changing your photos, apps, cloud storage, smartwatch, laptop integration, now that's much harder. NVIDIA is trying to create the same kind of ecosystem for enterprise AI. So, if demand is still enormous, and NVIDIA keeps expanding its ecosystem, why are investors still nervous? Because of one word. Valuation. This is where emotions start taking over. People confuse a great company with a great investment. They're not always the same thing. Imagine someone offered to sell you a beautiful house. Would you buy it for $100,000? Probably. Would you buy that exact same house for $10 million? Probably not. The house didn't change. The price did. That's how stocks work. A company can continue executing brilliantly, while the stock struggles because investors already expected perfection. That's why you'll often hear analysts say NVIDIA is priced for perfection. They're not saying the company is bad. They're saying expectations are extraordinarily high. Miss by even a little, and the stock can react sharply. Beat expectations again, and it could soar. It's a completely different mindset from evaluating the business itself. If you've learned something new so far, hit the like button, subscribe, and leave a comment. It really helps more people discover videos like this. And let me know in the comments, do you think NVIDIA is still the king of AI? Or will another company eventually overtake it? I'm genuinely curious to hear your thoughts. Now, everything we've discussed so far explains why the stock has become so volatile. But it still doesn't answer the biggest question. Is NVIDIA actually overvalued? Or are investors missing the next chapter of its growth story? Because there's one reason many Wall Street analysts remain optimistic, and it has almost nothing to do with selling more GPUs. We'll break that down next. Here's the mistake almost everyone makes when they analyze NVIDIA. They think they're investing in a chip company. But what if that's already outdated? Think back to the early days of the internet. Most people thought companies like Cisco were simply selling networking equipment. But the real story wasn't the hardware. It was the fact that the entire world was moving online. The hardware was just the gateway. The same thing may be happening with AI. NVIDIA isn't simply selling GPUs. It's selling the infrastructure that powers what could become the next technological revolution. That's a very different investment thesis. Let's look at what's happening behind the scenes. When companies like Microsoft, Amazon, Meta, and Google invest tens of billions of dollars into AI infrastructure, they're not making one-year bets. They're making 10 to 20-year bets. Why? Because AI is rapidly becoming part of everything. Customer service, drug discovery, software development, manufacturing, finance, cybersecurity, education, even agriculture. If AI becomes as fundamental as electricity or the internet, the companies providing the infrastructure could continue benefiting for years, not because of hype, but because AI workloads keep expanding. That's one reason many analysts still project long-term demand for advanced AI computing, even if quarterly growth becomes less explosive than it was during the initial AI boom. But here's what analysts often bury deep in their reports. Most headlines focus on one number, revenue, but experienced investors usually care about something else. Free cash flow. Imagine you own two businesses. Business A earns $10 million, but spends almost all of it. Business B earns $8 million, yet keeps most of that money. Which business would you rather own? Probably the second one, because cash creates options. It allows companies to invest, acquire competitors, buy back shares, develop new technologies, or simply survive downturns. NVIDIA has generated enormous amounts of cash from the AI boom, giving it financial flexibility that many competitors simply don't have. That doesn't guarantee future success, but it does give management far more room to adapt if the industry changes. Now here's something that rarely gets discussed on financial television. Software. When people hear NVIDIA, they picture giant AI chips. What they don't picture is software. Yet one of NVIDIA's biggest competitive advantages isn't made of silicon. It's made of code. For years, developers have built AI applications using NVIDIA's software ecosystem. That means switching to another chip isn't always as simple as replacing one piece of hardware. It's often like changing the foundation of an entire building. Imagine you've spent 5 years learning one language. Then someone says, here's another language that's slightly cheaper. Would you immediately switch? Probably not. Because the cost isn't just money. It's time, training, experience, and productivity. The same logic applies to enterprise AI. Companies don't just buy hardware. They invest in an ecosystem. And ecosystems tend to create sticky customers. So, is NVIDIA becoming the next Apple? That's a comparison some investors like to make. Not because the businesses are identical, but because both companies benefit from powerful ecosystems. Apple doesn't just sell iPhones. It sells an experience, hardware, software, services, integration. NVIDIA is trying to build something similar for AI, hardware, networking, software, cloud partnerships, developer tools, entire AI factories. The more pieces customers adopt, the harder it becomes to leave. That's what investors call a moat. And wide moats often lead to durable businesses. But don't ignore this one huge warning. Now, let's be careful. It's easy to become overly optimistic. History teaches us that every technological revolution eventually faces a reality check. Think about the dot-com era. The internet absolutely changed the world. But many internet stocks still crashed because expectations had become unrealistic. The technology was real. The valuations weren't always. Could AI experience something similar? Possibly. Not because AI is fake, but because markets often move ahead of reality. That means even an outstanding company like NVIDIA could experience periods where the stock struggles while the business continues growing. That's one of the hardest lessons for investors to learn. A great business doesn't always produce great short-term stock returns. Timing matters. Expectations matter. Valuation matters. Now here's the million-dollar question. If NVIDIA is still growing, if demand for AI remains strong, if its ecosystem keeps expanding, then why are some professional investors quietly becoming even more bullish today? The answer has almost nothing to do with this year's earnings. It has everything to do with what they believe the world will look like 5 years from now. And that's where we'll separate the hype from the reality in the final part. Because the real question isn't whether NVIDIA can sell more chips. It's whether NVIDIA can become the company that powers the next generation of the global economy. We'll answer that next. Let's finally answer the question we started with. Is NVIDIA stock dead? Based on what we know today, no. But that doesn't automatically mean it's a bargain. And that's the distinction many headlines fail to make. A company can be exceptional, while its stock experiences periods of volatility. Those are two different things. When investors say, NVIDIA is finished, they're usually reacting to the share price. When analysts remain optimistic, they're often looking at the business fundamentals. Those aren't always moving in the same direction. The question you should really be asking, instead of asking, will NVIDIA go up next month? Ask a better question. Will the world need significantly more AI computing 5 to 10 years from now? If your answer is no, then NVIDIA's future may be much less exciting than many people expect. But if your answer is yes, then the next question becomes, who is best positioned to provide that computing power? Right now, NVIDIA remains one of the strongest contenders. It has industry-leading AI GPUs, a mature software ecosystem, deep relationships with the world's largest cloud providers, a growing portfolio of networking, AI infrastructure, and enterprise solutions, enormous cash generation to keep investing in future innovation. Those are meaningful strengths, but none of them guarantee that the stock will rise in a straight line. The mistake that costs investors millions. Here's a pattern we've seen throughout history. During every major technological revolution, people tend to split into two camps. The first camp believes the future has arrived and buys anything connected to the trend. The second camp becomes so skeptical that they miss genuine long-term opportunities. Both extremes can be costly. The better approach is to separate the technology from the valuation. AI can absolutely reshape the global economy, and NVIDIA can still experience corrections. Those two ideas can both be true. Great investors learn to hold two thoughts at once. This is an incredible company, and I still need to be disciplined about the price I pay. That mindset often makes the difference between investing and speculating. Here's what analysts aren't telling you. Most television debates reduce NVIDIA to one question: buy or sell. But that's far too simplistic. The real discussion should be about probabilities. Will AI spending continue? Can NVIDIA maintain its technological lead? Will competition pressure its margins? How will export restrictions evolve? Can management continue expanding beyond chips into software and AI infrastructure? Those are the questions that matter. And the answers will likely determine NVIDIA's long-term future, not the day-to-day headlines. 3 things to watch before you buy NVIDIA. If you're considering investing, keep your eyes on these 3 signals. Number 1, AI infrastructure spending. As long as major technology companies continue investing heavily in AI data centers, NVIDIA should benefit from strong demand. Number 2, gross margins. High margins suggest NVIDIA still has pricing power. If those margins begin to shrink significantly over multiple quarters, it could signal increasing competitive pressure. Number 3, software and ecosystem growth. Watch whether NVIDIA continues expanding its AI platform, not just selling more hardware. If customers become more deeply integrated into its ecosystem, that strengthens its long-term competitive position. These indicators won't predict tomorrow's stock price, but they'll help you evaluate the business more intelligently. The biggest takeaway. Remember the promise we made at the beginning of this video? That we'd reveal what many analysts aren't telling you. Here it is. NVIDIA's future isn't just about selling faster chips. It's about whether the company can become the foundational infrastructure provider for the AI economy. If that happens, today's debates about quarterly earnings may seem insignificant in hindsight. If it doesn't, the stock could struggle to justify the enormous expectations investors have placed on it. That's why investing in NVIDIA today isn't simply a bet on semiconductors. It's a bet on the future pace of AI adoption, and on NVIDIA's ability to remain at the center of that transformation. So what have we learned? NVIDIA isn't dead. Its business continues to benefit from powerful long-term trends. But it also faces real challenges: fierce competition, geopolitical uncertainty, extremely high investor expectations, and the constant pressure to innovate faster than everyone else. That's what makes NVIDIA one of the most fascinating companies in the market today. Whether you're bullish or bearish, one thing is clear. Ignoring NVIDIA means ignoring one of the companies helping shape the future of artificial intelligence. And for any serious investor, that's a conversation worth following. If this video changed the way you think about NVIDIA, don't stop here. Because understanding one company is only part of the picture. The next question is even bigger. Who will actually make the most money from the AI revolution over the next decade? Is it the chip makers, the cloud giants, the software companies, or someone almost nobody is paying attention to yet?